Good evening, I'm Giuseppe Basile. I'm also known as the Fib Stalker, and today is Sunday, November the 15th, 2015, and it's almost 8 p.m. time in Toronto, 8 p.m. EST. And in this video, I'm going to offer a review of the 14 markets I follow. I will start from the euro and then offer a view on the majors and also touch on some futures SP500, dollar index, gold, and silver. So let's start from the weekly chart of the US dollar versus the euro versus US dollar here, which is what you see on the screen, and the market has continued lower in the last 3 weeks here. Sorry, the last 2 to 4 weeks here, and we saw this market moved lower quite swiftly here, but it is still in um, a sideways move. So the fact that it moved lower is not necessarily saying that we're going to continue lower right away. This market could also react, and this is going to if it's going to react for a brief move higher, the move can go as higher as 110.09 here. So the weekly, it's not it's not giving more information here. On the daily, what we saw a measure move here, which was actually initiated by a lower level, and we presented that lower level last week, which saw participation at around 110.50 area and broke price into the first and second target. The next measure move failed. That's not a strong signal because we don't have a strong 50% level below price, but yet that could be an indication that the current move lower has ended, and maybe the market is going to retest previous lows and then start a move higher. And I mentioned before, the move could go as high as 109, 110 there. That's the area where we would see bear coming into the market. Moving to the SP500, this market has been retracing since we were able to time these lows here twice. The market responded to the 1867 twice, and at the moment the market is behaving the same way as it behaved last year in October, when we traced from the high to high here. We see participation. That participation is coming today. So this market could really behave as it behaved in the past. We had same situation, smart money and plunge production thing coming into this October low here, and then the next extension played out from the high of the first bar to the high, and there was participation at this 1943. Fast forward 1 year and we have the same situation here. So I'm looking for a rebound from this level here, and that's already happening at the open on Sunday. And of course the market could also go and retrace the old halfway back, which is very, very close. So it's a good spot where to open new swing positions here, 2000s and even lower 1985. Moving to the dollar index has confirmed its strength. As you know, this 94.30 level has been tested a number of times, so this market is decisively pushing into 105.90, 104 first 80, and then 105.90, and there we will see what happens in this market, whether we're going to see a reaction to that 50% level or not. On the daily time frame, this market is clearly moving in extensions here, and we have an inner extension that is in play, and that has not been tested. So it's possible that this market has still some way to go lower into this 98.30 before we see a reversal. Moving to gold, gold has continued moving lower and has printed lower low here. Gold very close to that failure on the weekly time frame, closer and closer. Now, as I mentioned, with lower price in gold, we could actually see even a more decisive push lower because of hedging. So we will see what happens here. It's not impossible for gold to pierce this 10.54.69, the downside, and we will see what happens there on the daily time frame. We had this continued move lower, and something very similar we saw, of course, on silver. So there was no retrace in this price. If this price is going to retrace because before continuing lower, if it continues lower, an area of potential resistance, it's 11.16 here. So if this price puts a rally here, we need to see how it's going to behave in the next 2 weeks if he gets there, 11.16.63. For silver, silver had a similar move here, with the only difference that silver is still into a sequence of shorts, 1810 pointing to 1250, and we also have this shorter term short here, which is bringing price very close to lows, and we know that there are a number of targets, 1350 and 1250 below this price at the moment, so it's not impossible for this price to continue lower, and we will see what happens in the coming weeks. Moving to the US versus Japanese yen, this market has been of course pushed higher by the strength in the US dollar, and we saw participation in the next extension from 110 to highs. We saw participation in that 117, 118, and then again that level was not retested, but this test was good enough here. When we move to the daily, we see that there has been the market in the last few weeks has been moving in extensions and retrace from highs to highs. Price got into the first target and second target, and we already witnessed the fact that the next extension was holding actually at the beginning, at the end of last week, but now the open of the week here on Sunday, this is the Sunday bar. Clearly, the market it's actually responding lower, which means that this level has been broken. So there is the possibility for this market now to correct to a lower level here, and the first level I would consider would be that 12.38 there, and after that a level to consider the all the way halfway back, okay, which is 120.80 there. If the market gets there, we're gonna use the Phipps Tolkien timing on it in order to time an entry in the direction of the trade, and we will see. So we will see what happens there. Okay, so these are two levels if this market corrects. Another level that we have to watch as well is the highs to lows, but this is less important because the market has already reached a target and is retracing. Euro versus Japanese yen, this market is actually moving lower, and we know that this market is actually the weekly are not interested in pushing this market higher, and the last measure move short here, it's bringing price into the first target, and we know that the weekly is only interested in participating long at 122.11. That doesn't mean that the weekly are shorting this market, but this market is being controlled, as you can see here, from by the daily. And so I anticipate this week we're going to see the 130.20 target here, and then we'll see whether the market will continue lower or there will be a bounce. If there is a bounce after we touch that 130.20. The next measure move is going to be traced from the highs to whatever lows price prints here. Okay, so this market is actually still moving lower, and I don't see any reason why it couldn't actually in the coming weeks and months get into the lows here, 126 and then even 122.11. Moving to the pound versus Japanese yen, this market is actually we have seen this market moving higher, and then there was a continuation on with the sequence of measure moves. And if you remember well, we actually considered this measure move here, which brought price into the first target, and then the next measure move on the weekly time frame was from the same level to high. As you can see, there was participation again there, and we could know that level with 3.5 weeks in advance. Then market got into the first target, and it never retraced into the next measure move, as you can see here. And we actually identified another level that the market was following, and there was an extension from the highs to highs here. And that level actually identify a new measure move. The first target was not reached, or it was barely reached here, and I will not consider this touch 86, 95, 86, 96, 60. So that first target was never touched. So this level is still in force, and at the moment this market though is responding on the weekly and on the daily to shorts, as we can see here, because when we trace from highs to lows, there was participation at these levels, and we could see participation again at those levels, which would mean bringing price down into 176.77. So that's what we're seeing on the weekly time frame. On the daily time frame, we have something similar here, and we're going to I'm going to consider here the trace from highs to lows. This came into play in September, and if this level comes into play again, the sequence of measure move here is not well formed, so it's not going to so the failure here, in case we retest at 197.85, it's very likely, and the sequence has already failed here. So if this price is going to be pushed into 187, it is going to be because of the smaller time frame. Moving to the Australian dollar versus US dollar, this market has been trading short again. We saw participation at this measure move that we traced from the recent highs in October to lows, and this has not brought price into the first target of 69.92 yet, but that's the direction, and that's very probably where this market is going to continue to at this point. And we saw the break of this inner measure move, but this is not really important, as we don't have valid 50% below this price. So this is not important. As you can see here, the 61.8% level 72.07 has been pierced already. So this market, even if it retraces, is a very well formed measure move shorts here, just pushing price lower into that 069.40. The New Zealand dollar is a slightly different story, although it's responding to short and has responded to short. This market, when we look at the weekly time frame, is within an area of potential participation long, and that's the reason why we saw this move higher into an extension short. So this extension short is still in play here. As you can see, last week there was very little price movement there, and when we look at the daily, we had a traditional measure move here, which actually brought price into that first target, and now there is a possibility for a continuation into that first target, which actually validates what we are seeing at the moment on the larger weekly time frame as well. Okay, so this is what we see here, and there is a possibility for price to get into 064.53, and we will see what happens. We will see what happens from there. The next pair, it's US dollar versus Canadian dollar, and of course this market is still pushing higher. There are a number of good reasons for that. There is of course the strength in the US dollar, but also the extension long from the highs here in March, end of March, to the highs that we had one year after, basically. And as you can see in these very large chart time frame, weekly time frame, there was participation at this 120.62. This brought price into the first target, and now has the potential to bring price even higher into the next target, which is 130.38. Okay, on the daily time frame, we saw a very well formed measure move here, which is actually pushing price higher into that 133.84, which is an intermediate target, and it's possible for that target to be touched surely this week, and then the market could actually continue higher. If it retraces after hitting that target, the next area where we're gonna look for participation is going to be the lows to whatever highs is printed here after after reaching that level. And next we have last two markets here. The first one is the euro versus the Canadian dollar, and this market continued. Moved actually laterally this week, so it was not really a lot of action there. This market is on the daily is actually responding to this measured move, which could bring price lower here into the second target, and the first target was hit already. And there is also this intermediate measured move here. As you can see, we saw last week participation on the upside because of profit taking from this inner measured move. So the next area where if you're going to see a continuation lower, the next area where the market could actually react to has already come into play, and that's the reason why on Friday we saw the market being stopped here, and today it opened lower. So if that was the only test we're gonna get, if we get another test this week, 143.57, this could actually push price lower into the first target, and then again the second target here. The market could just continue lower into the two targets. If the 144.5 breaks here, there's a possibility to see again a little rally here into the next level, and this would be the 145.36 level here. So above 144.03, 145.36 becomes very, very viable. And finally, US dollar versus the Swiss franc. This market is actually moving now in a large sequence long after exiting the sideways conditions here. The market actually went into the first target parity here, as you can see on Friday, and today it opened at that level. And so this market can now has two different courses. You can just continue higher, or considering how aggressive it has been, any retrace is going to be very, very it's going to be contained. The largest retrace I could see would be into this 098.23. Okay, but it's very possible for this market to just continue higher actually pushed by the weakness in the euro and in the strength in the US dollar. Okay, so this is it. This is it for this week. I hope you appreciated and liked this review. I hope this review can be useful for you. If you want to know and know more about the methods I use in order to analyze prices you see and trade it using confirmation, procedural confirmation using the Fib stalking timing technique, just let me know. You can write me at fibstalker@gmail.com, and I also have a website. I'm still working on it, fibstalkertrading.com. I'm renewing it, and you can contact me on the email. Thank you very much, and have a great week. Bye bye now.